Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, July 19th, 2019. Before we get into the charts, let's take a look at what might move the markets next week. Remember, we are in the thick of earnings season now. We've got a heavy economic calendar next week, so let's look at just some of the names that have the potential to move the market. So let's start out here. We're going Monday. You can see some of the companies here. You have Coke, Visa, a lot of the aerospace and defense companies. There's Lockheed Martin. You probably can't make it out there. That's what that is. Biogen, one of the big biotechs. United Technology. So a lot of big names. Of course, there's Boeing, one we'll watch. Here's one of the FANG stocks. There's the F and FANG, or the FAAMG that I use. Facebook, Amazon, Apple, Microsoft, and Alphabet. Tesla is going to report. Ford. So you have the automakers. A lot of big sectors, industrials, you name it. Transportation stocks. There's UPS. There's another one of the A's and FANG. Amazon's reporting. That's obviously a big potential market mover. Intel, the king of the semis, so that's certainly one to watch. And you get, down the line, you can see all the other names. There's Twitter as well. So that's what's there on the earnings front. Now we also have a pretty thick economic calendar next week that we need to keep an eye on as well. You'll have existing home sales. Remember, it's one of the three pillars that I'm watching for the consumer right now is the housing market. So let's keep an eye on that. There's new home sales followed there. Of course, crude's been moving lately. A lot of great trades on crude. It's been a very tradable security lately. Durable goods, always a big one, potential to move the market. Jobless claims, that's the other pillar, the three pillars of the consumer that I'm watching: the stock market, the job market, and the housing market. That's what keeps the consumer spending and confident, those three pillars. And obviously, if one of these two go, the job market or the housing market, then that's going to certainly have an impact on the stock market, because the consumer pulls in their shell. If their house price starts going down, or they lose their job, obviously, or worry about losing their job. And then, of course, the week culminates with the all-important GDP. This is what it's all about. GDP comes out every quarter, and that's this is what this is the metric used to gauge how the economy is doing, whether we're in expansion or contraction mode. So big economic calendar week next week as well. Okay, so as members of the site know, my most of my focus in my own trades lately and what we've been looking at on the site are things other than the market. Especially this week, well, we've had some great trades on the silver mining stocks. Got in front of that move with silver playing a game catch up to gold. Even able to reverse out at the highs today on a lot of those trades. Based on the video I did earlier today. Other things are popping. In fact, I just wrapped up a video, guys, in a trade ideas in a new sector I found. That video is, in fact, it was just uploaded. So right after or right before, actually, I should post that one for members of the site before this one comes out. So we'll have some trade ideas in a new sector that I came across today to watch going forward. But however, as I said, new market goes in these little kind of doldrums, and it doesn't go to sleep forever. Here's a 2-year daily chart of QQQ, simple stuff. Nothing has changed in the technical outlook. We have a series of, we look for these divergent highs on the daily chart, and sometimes you diverge and you get a little correction, and then you go up, make a new high. As long as those divergences are intact, that's where all these big drops come from. Divergent high, correction, divergent high, correction. This one, 60-minute chart, we had sell signals in other areas, plus, and of course the trend lines too, trend line break, and then correction. And now we've got this most recent wedge, and miss in one of the trend lines there. There's your divergent line right there. Big divergence too. In fact, this divergence is now coming comparable to almost as big as what we had here leading up to that Q4 bloodbath there. So, and today we had a nice, you can zoom in, see a nice little bearish engulfing candle, and we're starting to get some volume. So that's why I'm saying the market's waking up here. Microsoft reported today. That's the first of the big fangs. So we're starting to get some of that stuff out of the way. You can see the two volume bars that we've had last 2 days, including today's bearish engulfing candle. We're finally kind of getting back, or they were definitely above the recent average right there. So that's something to note. that not only we went down today, but we did it on increased volume, closed down 0.73, continued futures drifted a little lower after the close. But again, to be continued next week, as I showed you, a lot of big market moving names, but the charts still indicate more downside to come. We just need to get that catalyst, that bang, and maybe it will be earnings, maybe it'll be something on the economic calendar next week, maybe a little both, or maybe they don't pan out. But more often not, they do. As I often say, I would say not easily 90% of the time when you have confirmed divergence, which is what we now have today. What I mean by that, in my book, you need to see the PPO put in a lower high with prices making a higher high. A lot of people consider, we had, technically speaking, negative divergence right here all along the way when the indicators were lagging. Once prices made a new high, but in my book it was not confirmed until you get the bearish PPO crossover, because the PPO is a momentum indicator, and if it's heading higher, it can continue to head higher and just burn right on through the previous high, in which case you no longer have divergence. That didn't happen. So when you effectively make that crossover, and again, it's just something I use. It's something I've, over the years, I figure you get a crossover that's effectively a lower peak in the RSI, and you can see it here, PPO histogram. Boom, there it is. There's crossover today for the first time. So to me, and that in itself is a sell signal. I don't trade it as a standalone sell signal. I use it in conjunction with other things. But I can tell you this, that and I've said it recently, said it the other day too. I'm going home short. I'll wait till we get a little more evidence to add. Let me show you some other charts, some other levels to look at. But I did want to point that out because it's the first decent, significant technical development we've had in a while now. So what we're looking at here on this chart is the level there, about 199.44-ish, we'll call it. That was the previous highs right here. That's where QQQ failed. About a week and a half of trading. Tried at it again, failed. Finally popped above it with a very lackluster, unimpulsive breakout. And we're now back down through there. Let's zoom in down to a 60-minute chart and take a look at that. 60-minute chart. A lot of lines here, and that's been the story. In fact, when I look at this, I can continue to draw, especially when I get to the futures, a series of trend lines. We had this trend line there, and it's not as if each one doesn't work. They do work, and they've worked for little corrections. Another trend line there, a little break, and then most recently this trend line break, and so far a correction. But if you zoom in real tight here, you can see this is gap support right here, and that's what we closed on today. So they're like the markets almost always do on a Friday. They're going to keep you guessing over the weekend. Mr. Market's never going to make it easy for a trader to go home long or short on a weekend. It's just, again, they like to keep you guessing. So the breakout is pretty much still intact. We're a little bit below where the previous high was, but for all intents and purposes, we're just back testing right now. So I can't get too excited about it from a price perspective. But again, I'm seeing the indicators roll over. I'm seeing the trend lines broken, and that's where we're at. So you can see some additional levels if next week that goes. Markets will probably go into a little bit of a holding pattern till you get some of the big market movers reporting, especially Amazon later in the week. But who knows? Sometimes you think it's going to go into holding pattern, and it goes one way or the other. So all I can tell you is trade the charts, not what you think is going to happen. So if you start to see things breaking down and they're running out of Amazon before they even report, what was it, Thursday, then take it for what it is. But what I'll do next week, guys, by the way, I'll do an analysis, in-depth analysis on the FANG stocks. I like to do that from time to time. Look at Microsoft, Amazon, Apple, Alphabet, Facebook, Cisco, and Intel as well. The top 7 or so components there. So that's what we look like on the QQQ 60-minute. I'll get the SPY here in just a minute, but before we do that, let's look at the Nasdaq 100 futures. So again, this is what I'm talking about, more so on the futures. You just see these series of trend lines there, and they break, draw another trend line, you get a break, and there's been little micro patterns within there, that bullish falling wedge, and that led to this next pop up. Then you had a little small wedge there that broke, and then this bigger trend line here. And again, all seem valid to me. And this one was most recently broken. When I see this series of fanning type trend lines, what I then like to do, and I did it today, is go to the put on some Fibonacci fan lines, which I did on one of these boards. There it is. So there's a Fibonacci fan off the lows right there, and you can see how well these Fib fan lines work. So you add them to the low reaction, low in price. This is the first fan line there, second fan line. You can see prices kind of danced on it, around it, broke under it, and then jumped down to the next one, flirting there, and so that next trend line, Fib fan line, would likely come into support if we drop, and once we break that, then we should, if we do, which I suspect, that's where you'll probably start to see the selling accelerate a little bit. Here's some Fib fan lines that I did on the QQQ daily chart. This has a low back here in August of 2017, and again, you can see, prices behave pretty well off these, coming up, acting as resistance, banging up against this fan line, came in, had a sharp correction, hit the bottom fan line like right there, which we just recently back tested, and you can see a lot of every time we had a sharp correction, that bottom fan held, but then you kind of you have these ranges where you trade like this within one fan, break down, and then you're within the next fan line. Most of the trading occurs, and again, with these sharp corrections, you kind of hit the lowermost, and then finally when that lower one gives way, which it did right here, boom, that was it, and then you get the big drop. And so that set up this series here off the lows back on December 24th, Christmas Eve lows, and you can see how that one went. There's fan line number one. It acted as a trend line support. Once it broke, boom, right down to number two. And again, there was a lot of momentum, so you overshot. Yeah, came through down here, but then you came back up and you started then trading off this second fan line here. So when we come back down, the logical support, even if we overshoot it on a quick move down, would be to have some reactions off this third fan line, and then ultimately that fourth, and then boom, that's all she wrote if that one goes. Okay, and these are just a lot of different levels. I'll have to clean this chart up a little. That's QQQ daily, and I said nothing has changed at all for a while now on the weekly chart. Look at this week's candle. It's red, but it's not anything. It's not a bearish engulfing or anything like that. We still have the divergence on the weekly chart. Let's go look at SPY real quick, and ES, and maybe the small caps, and we'll wrap this up. SPY, there's almost a bearish engulfing candle. We didn't quite take out yesterday's candle, but we are below the trend right here, the trend line on SPY. We broke it on Wednesday, red candle. And again, you're seeing volume start to pick up. When you look down here at the volume bars, you can see a little tick up on this selling recently, increased volume so far on the selling since the breakdown there. So that's a sign of confirmation, if you will, of the breakdown of that uptrend line on SPY. SPY has some work to do. 294, we'll call it, is a pretty big level. You can see it there, 294. Why is that a big level? Well, that was the high back here, several attempts on SPY, which it failed. Tried at it again, several attempts failed, another correction. Tried at it again here, one little brief doji, and came back down, so a failure. Finally took it out, but a lot like the QQQ breakout that I showed you recently, it's not been very impulsive. Number one, obviously very low volume, that's a sign of non-confirmation, and like QQQ, you had negative divergence, which is now confirmed. You have the bearish crossover I was looking for. That came a few days ago on SPY. QQQ just confirmed today, as I showed you, and so there it is, divergent high. The last time we had divergence like this on the daily time frame of SPY was all the way back here before the big Q4 smackdown right there. So there was our divergent high in SPY leading up to the 2018 highs, big correction afterwards, and we've been building divergence from this point here all the way up to here. Again, we had a divergent high there. It's not as if it didn't play out. It did play out for a very healthy correction. And then we pushed up and simply extended the previous divergence just like we did at this point in time. So you guys know where I'm still thinking this market's headed. We just need to get that catalyst, and maybe it'll be earnings. But again, first things first, and that is you need this breakout to fail. You need an impulsive move back down below 294 on SPY. And here's what SPY looks like on the 60-minute chart. And there's our rising wedge pattern. Divergent high 1, correction 1. The divergence extended, continued up to form DH2, much larger divergence, which sets the stage for a much larger correction than the previous one. It was a small divergent high, small wedge equals small correction. Big divergent high, big wedge. Remember, you take the widest part of a wedge, which is right here, add that to where wedge breaks out. That gives you your measured target. So that would measure, and I'm just ballparking that, guys, but I have a pretty decent support around 291.40. So that's if you're looking, if you're long and bullish and you're looking for where to go long on a pullback, that's where you might want to go long. However, as I just showed you, this is a 60-minute chart. So if this does play out to that, it's going to do a couple things. It's going to have more significant implications on the daily chart because it's going to take us down back below the breakout. It's going to further confirm these divergences on the daily time frame and further confirm the negative divergences here on the weekly chart as well, and set the stage again for a potential larger drop on the markets. IWM, small caps, mid caps, most sectors in the economy are all peaked back in 2018. It's just the tech-heavy Nasdaq 100 and S&P 500 with those big fangs for the most part that have eked out new highs. But IWM, you can see, continues to make a series of lower highs right now. Had divergence right here, negative divergence on the daily chart, and that divergence continues to play out. We had that first leg down, we had a counter trend rally, and let's look at the 60-minute chart, see if that gives us any more clues. It's been a little whippy. We've had some whipsaw signals. I mentioned this trading range the other day that we've been in. Broke it, snap back up, another break. So now at this point, what you need to do is really add another line down here at the bottom, because this 153.69 has contained all these recent drops. So that's what you want to look for next week. A drop below there should do the trick. We had pretty impulsive selling today, but again, we'll pick it up next week and see what happens. Again, a lot of companies reporting, and maybe there'll be some kind of geopolitical or other fundamental catalysts before some of the big companies report next week. Otherwise, the market's likely to continue to hold up in a holding pattern, waiting to see how these the earnings on some of those big companies come out later in the week. But again, 150.80 is my next downside target. It's a pretty clear target too. So whether you're bullish or bearish, if we break below, much below this week's lows next week, I put very high odds on that being hit. And depending on what the large caps are doing at the time or the market, if we go in some kind of big sell-off mode, we can slice on through there. But I'd put the odds good at a reaction. So maybe you're bullish and you're bullish on the small caps. You're looking for a place to buy. You could buy here at support. Markets are closed now. See what happens next week and try to swing back up to the top of the trading range and then position on a breakout above 156.60 or so. Or you can buy a pullback to support there. And if you're longer term bearish and you're trading the long-term charts, the dailies and the weeklies, and you're not concerned about the noise here in the short-term charts, and just ride out any counter trend bounces and swing for the fences. I'll say this, there aren't any hard sell signals in the market right now. We still have the same thing for the last few weeks, just a setup. There's a lot there that tells me that's where we're going to go, but we need to see some kind of impulsive selling and everything I showed you before on SPY and QQQ. Let's see those levels break. Let's see the breakouts that happened recently fail with conviction, and that'll give us a little more confidence that we're going to go lower, more than just 2-3% lower. And finally, for you Dow fans, I don't always cover the Dow, but here's DIA. There's that top back in 2018. Call it top number 2, top number 3. Top 1, top 2. Failed, top 3. We popped above there recently. So look, this should be, it's a breakout above those previous highs, but again, it's marginal. Just like this one was slightly above, you can see number 2 was slightly above number 1, and it failed with a violent correction afterwards. So, why bulls would have at the time been cheering that, applauding that breakout, they got smoked on taking the breakout to new highs. Over here, we failed a little shy. This time we broke out again, marginally above this high. There's that line right there, 269.50-ish. Is that high back on October? And so we broke out recently, like SPY and QQQ, but it was not very impulsive. And so far, we're coming back in. We haven't failed it yet, but that's what you want to look for. What tells me it's going to fail? The reason I take some breakouts, I go long on some breakouts, and I look to short others that I suspect will fail, because as I say, fewer things in trading and investing are more bearish than a failed long side breakout. And so the reason I suspect this one will fail is the strong negative divergences that are in place right now on the PPO and the RSI. PPO turning down there, and if it does fail, again, we want to look for what does it look like if we start to move back down here impulsively with some big red candles clearly above all these recent reaction lows. Let's say about that level, we're probably going to go down, and we'll probably come down pretty quick. Once the market fails a break to new highs, it's not pretty. So that's, again, we don't have the sell signals yet because we are above those previous highs. But be on guard. Like I said, don't fall asleep at the wheel just because the market's fallen asleep lately. Because some of these big moves, they come out of nowhere. And right now, there's a lot of technical evidence pointing to the fact that we'll probably fail. And again, the beauty of shorting is stocks tend to fall a lot faster than they rise, but you can't wait. By the time you wait to hear CNBC or Kramer, whoever it is you listen to, tell you that get out of the market, we're in a bear market, or a correction, you're going to miss the bulk of the move. The bulk of the move comes very fast, and that's why we use these technicals. That's why I spent all this time talking about 60-minute charts and little trend lines and early cues, because the big move comes quick. Just waited 2 days and you would have missed the move. You would have shorted here, and then you would have got caught in this counter trend rally, or you would have shorted here, and then you would have got caught in this counter trend rally that was about 9% and would have stopped you out. You would have tried again on the next drop. So you got to kind of get ahead of these. And there was a fine line there. I tried to get ahead of the last one right before I went on vacation. We had a short trade on QQQ. It got stopped out, but I think the stop was less than 3%, and that's the thing. I'll take those all day long. Take those little shots. So we'll watch it next week. Might add something, another index short trade, but until then, like I said, I'm having a field day trading precious metals, commodities, ag commodities, treasury bonds, crude oil, natural gas. Had tremendous week on, we had longs and shorts. I did on the site, both officially and unofficial, on crude and natural gas, and just about everyone was profitable, many to the tune of double-digit gains in short order. So that's where my focus has been, but it may quickly turn back to the markets. And as you can tell, spent a little more time on this video than the recent ones, because we may be setting up for the next move here soon. And finally, last chart, let's just look at the Dow on a 60-minute chart. If again, it's those 60-minute charts kind of help you hone in on buy and sell signals. Nice little trend line here. You want to sync this up. If you're a Dow trader, it's not my favorite index. I like trading the Nasdaq 100 and the small caps because they're higher beta indexes. They move more up and down, a little more juice in them. But if the Dow's your thing, here's a nice little trend line that you could trigger a sell signal on a break there. And these are just rough targets right now. But you can see volume price histogram. There were some reactions there, a big gap there. Even though we traded through there, I see a lot of reactions around that level, so I think that's a logical target. And maybe a bounce off that level. If 266.74 goes, probably head on down here. But you want to see SPY and QQQ confirm. Anytime I'm trading any one of the large cap indexes, whether it's futures, ETFs, if one breaks down, the one that I'm trading breaks down, I want to see, let's say I'm trading QQQ, I want to see SPY break down as well, because at the time, if QQQ breaks down and at the same moment SPY falls to a very key support level and bounces, guess what happens? QQQ, that breakdown in QQQ will probably prove to be a false breakdown. Why? Well, because there's a lot of overlap in SPY and QQQ and even Dow. They're holding the same stocks. They're holding large cap, mega cap stocks. Yes, not all the holdings are the same. QQQ has a lot more tech stocks, doesn't own any financial stocks like the Dow or the S&P 500, but yet they're going to move roughly together. So that's why you want to watch them all. All right, let's wrap it up here, and we'll pick it up next week, see how things go. This has been Randy Finney with the Right Side of the Chart. Have a great weekend.